Ladies and gentlemen, my name is Irina Ryabtseva. I'm Community Manager at Imaguru Startup HUB, and we are glad to see you at Imaguru Startup Sprint. While bad news attack us, we encourage you to stop thinking about it, to dump scrolling, and concentrate on our event. Because nevertheless, our office was shut down a month ago, we're still holding productive events for your startup. And we want, first of all, thank our international community partners for your support and joining our events. So today we are going to talk about startup investing during COVID and Awesomic disruption takeaway from Swedish Angel. And I'm glad to introduce our speaker today, Mathias Eklöf, CEO and founder of HUB Ventures, a Swedish investment company focusing on AI, SaaS, automatic and deep tech startups with R&D emerging markets. The portfolio includes YouScan, Allset, Competera, Let's and other cool startups. HUB Ventures is a member of the Ukrainian Venture Capital Association. Matthias, hello, we're glad to see you.
Hey, yeah, thank you. I'm really happy to be here. I think Imaguru is doing, an important job. Like I visited Imaguru in Minsk last year, and I was very impressed. And so I'm more than happy to be here. Yeah, it's a big honor, and it's fun also.
Thanks very much. So Matthias, our stage is yours. For maybe introduction and several notes, maybe to make more long introduction.
Yeah, thank you. So I did make a few notes before, and I'll kind of go through those, and then I'm more than happy to take questions. You can even interject during my sort of initial part here. I'm more than happy if you want to do that. But yeah, thanks for the introduction. I appreciate it. And I'll just say, yeah, Swedish Angel. So it's only partly true. So I'm only partly Swedish. I'm Swedish Finnish, and I don't know if I'm an angel. I guess I'm a business angel. But if I'm an angel more broadly, that's a different issue. But anyway, yeah, HUB Ventures is a Swedish investment company, and I think maybe the interesting thing here is that we're focusing on Eastern Europe, and we love markets and people who work in markets that are being disrupted. And so we have invested in Ukraine for some time, and we really like it here. As we speak, I'm in Kiev. I love it, great place. So yeah, I'll start by saying something about COVID and other disruptions, right? So COVID is obviously this huge thing, this huge disruption, which is maybe the latest example of a disruption, but we've had many of those, and not exactly the same. And that's the point also. Disruption is not the same as the last thing that happened. So the financial crisis was a bit different, and then COVID was a bit different, and so on and so forth. And not to even mention, political changes, which can be very unpredictable. But there are something that these disruptions, including COVID, have in common. So they are some kind of, maybe not black swans, but they are some kind of swans of some color. So that idea is an old idea, the idea with black swans, but it was popularized by a guy called Nassim Nicholas Taleb in this book called The Black Swan. So anyway, so disruptions are some kind of swans. The pandemic itself, which happened last year, was actually predicted. So people often forget about this. They think that it was this huge sort of thing that came out of nowhere, but actually it had been spoken about by many people before it happened. So it's not really a black swan, maybe a gray swan. But you can argue about that, but what we can, I think, agree on is that the effects of these disruptions are unpredictable. So if we talk about the situation with COVID, right? There is a primary effect that you can get sick and even worse die, which is a huge tragedy. And then you have sort of secondary effects where if you work in a restaurant and the restaurant is closed, you might lose your job. And then there can be tertiary, these words get a bit difficult here, but third level effects, right? So this could be, for example, as people work more from home, they might make more kids, you have more time, like you're like bada bing, bada boom, like you want to do some stuff at home, Or the other way around, maybe you have more divorces during COVID because you work more from home. So, like, you don't really know, I don't know if you know, I'm not sure about what's going to happen there. So this is an example of like true uncertainty. So what looks like a very simple thing, like people get sick and, you know, some certain percentage of people get sick and even worse die. Like it looks like very straightforward, but actually there are these like second level, third level, fourth level effects. So if people get more divorced, then the demand of lawyers will go up, you know? So like you have all these effects which you don't think about when you think about the disruption itself. And that's like very typical for disruptions. So you're suddenly in this environment with a lot of uncertainty. And why I'm saying this here when we talk about, you know, startups and investing, it's obviously because if you can be there and take advantage of those second level, third level, fourth level effects, then you can be richly rewarded. I mean, our job is to think different as startups and as investors. Like we need to, like by definition, we need to see things a bit differently than the mainstream of other people and maybe the mainstream of investors. Like you have to believe that you're doing something, that you're seeing something different and that you're taking advantage of this. So then I'll say kind of like a second thing that also happens during disruptions is that there is increased volatility. So first of all, you have this uncertainty, which has all these like different effects on different levels, but also you have uncertainty which leads to higher volatility. And if you've been trading in the financial markets, and this might get a bit technical here, but basically if you've been trading shares or options, then you know that an option increases in value during times of uncertainty. So if you have an underlying share, Apple or Tesla or whatever, and then you have a call option, which is a purchase option based on that share, then the value of that option goes up in times of volatility because the probability that you will get money from that option goes up. So that's a bit technical, but it's actually, if we skip the technical side of it, it's a very important point that if you have things which have optionality, if you have some kind of options, and it doesn't have to be a stock option, it can be a startup. So if you have something with optionality, then you actually benefit from times of volatility. And this is a hugely important point. Of course, there is the criterion that you have to survive. So yeah, like you can't just have optionality and then like lose the option, obviously. Like you need to also keep the option, so you need to survive. So our job during times of distress and disruption and so on is to survive, right? But if you can do that, then you have this optionality and you can benefit from it. So again, like this thing with disruption, uncertainty, outliers, and you can call it in different ways, like asymmetric outcomes or fat tails and optionality. This is something that this guy Taleb writes about, and I recommend that you go there if you want to go deeper into like the technical side or philosophical side. Like then I suggest that as a point of reading. Well, but again, like the point that I'm making here is that during times of disruption, it's good to be a startup and it's good to be a startup investor, assuming that we can survive. But yeah, assuming that it's good times for us. I'll say something that those are like more general philosophical or theoretical points, but I'll say something more on sort of, you know, based on personal experience. So, you know, what I saw during COVID. So last year, just to give you an idea, I spent 3-4 months in the US, and then I spent some time in Sweden, and I spent some time in Ukraine, and I visited Belarus as well. So I basically split my time between these different places. And we were very active during COVID, and we made, in the past year or so, we made 10 deals or around that number. So we were very active, and so the thing is obviously that even during you know, times like COVID, when people are working distantly or from home, whatever, startups need money. So startups continue to raise money during these times. So nothing kind of changes there. But investors are typically more risk averse during those times. Like investors are typically more hesitant to invest. So you kind of create this balance in a way. But if you're between demand and supply, right? So, but if you're an active investor, you can do a lot of deals and you can do a lot of good stuff during these times. And yeah, like in general, during difficult times, prices might go down for stocks or for any kinds of assets, and also for startups, it might go down. So, you know, what Warren Buffett says, you know, another guru, right? But what Warren Buffett says is that if prices go down, there is a discount, and then you should buy. But this point is, it's hard for investors to actually do it when the times are tough. Now, of course, you shouldn't use, if you're an investor, you shouldn't use tough times to try to get benefits from startups, like to push down the valuations too much or to impose, hard conditions on the startups. That's not what you should do. And actually, to the contrary, if you are an active investor during a difficult time and you keep talking to the startups, you keep supporting the startups, then you can actually benefit a lot, because you're one of the few investors who are active. And if you also treat the startups well during difficult times, you will get a huge amount of goodwill from that. I'll give you one example. So we invested in Ukraine back in 2014, 2015. And this was a very, very kind of politically dynamic time. I mean, and you know, times of war and so on, you know. And we were one of the few sort of Western, you could call it, investors investing in Ukraine at that time. And when we talk about this now, like people listen to us because they see that we are not bullshitting, like we are not like just following the trend or like following the fashion, you know. Like we were actually investing in Ukraine when almost nobody else was investing in Ukraine. And that's also one reason why I think it's so exciting to talk to you guys and to stay in touch with your community, because like now is the time to start startups and to invest in startups, even if it might feel, you know, difficult and so on and so forth, but now is the best time. So yeah, I'll maybe we can go deeper into any of these things, and I'll be happy to do so. I'll just say like a few things where I think, so, you know, I know the Swedish kind of tech market, I know the Ukrainian, kind of Eastern European tech market, and I know something about the US, mainly like Silicon Valley tech market. But I'll say something where I think places like Ukraine and Belarus are similar, yeah? So, first of all, there's a lot of talent, but there's kind of like a lack of investors. So there's this like mismatch between the amount of talent, which is up here, and the amount of investors or investment capital or good capital, which is kind of lower. In Sweden, it's the other way around, and like in Silicon Valley, it's the other way around. Like you have too much capital and you have too little talent. But yeah, like in Ukraine, and I think Belarus is the same. Like you have more talent and less capital. So this is very good if you're an investor. And if you're a startup, of course, you need to find that capital, but it can be done, you know. It might be a bit more difficult to raise money, but the money that you're raising is going to be more kind of smart money, more clever money. I think also where there is a similarity between Ukraine and Belarus is that you both have very strong IT industries, like outsourcing industries, but in general software development, not only outsourcing, that's a kind of like a bit of a strange word, but software development industries, which generates this huge amount of talent, which then, you know, at some point, if you've been working in an IT outsourcing or software development company for a few years, you're gonna, with a certain probability, want to have your own startup, because you want to take the next step, and you and your friends have been talking about it, drinking beer, whatever, and now you're ready to start your product startup. So this is very good, and this is something where Ukraine and Belarus, I think, are similar. Also, there's a pretty small home market. So the Belarusian market is small, the Ukrainian market is small. So if you have a product startup, you're going to automatically look maybe to the United States, maybe the UK, maybe something else, you know. But this is a huge benefit, and it's actually a similarity also between Sweden and Ukraine and Belarus. So Sweden is relatively small, and that's why all of these guys like, you know, Spotify and Skype and so on and so forth, they go international directly, you know. They try the product in their home market, see that it works, but then they go international. There's also a very friendly ecosystem, both in Ukraine and Belarus. So people help each other, and I think it's underappreciated. I think this is a huge asset. So it's much more like competition in Silicon Valley, much more tough in that sense. So yeah, I think that's very good. Like, you share experiences with each other. And the last point I'll make is, yeah, it's a general point about kind of disruption, but you know, about COVID in particular, that COVID has actually increased the importance of tech. So COVID has kind of accelerated certain things. You hear this point a lot, and some of it you can argue, you know, against, but the general point is true, that COVID has accelerated the use of tech, and things which otherwise would have taken a few years to develop, they have been developed maybe in a few months in some cases. So yeah, I think those were my initial notes, and I'll be happy to reply to anything you might have, or go deeper into one of those topics. And I hope it's not like too philosophical or too theoretical. I'm happy to get like down and dirty, you know, and practical if there's something about the startup game or the investment game that you'd like to go into in more detail.
Thanks a lot. Yeah, we have prepared several questions, and before we start, I want to say thank you for your quite interesting thoughts and really important words for us also. Yeah, you know that we can say that Ukrainian startups and Belarus startups may be alike sometimes, because, you know, the share of problems that we faced during COVID and after the August last year, lots of Belarusian startups now they left Belarus and now are working in Ukraine, and that's why, yeah, it's maybe some kind of problems. Yeah, but we have like in Belarus we have a high technical park. It's like our park with technology startups, and now we know that lots of startups from this high-tech part now are in Ukraine, and they want to continue their work. Yeah, and even now we have in some news, in some sorts of social media, we have like Belarusian startup, but now based in Ukraine. Yeah, and it's about us, and we share experience, we share knowledge, and yeah, you are really true that sometimes we're alike. But I want to ask you, and we want to ask you, first of all, about you and your, what challenges what challenge maybe or challenges was or were the most difficult for you as business angel when COVID began? Maybe some of them or one.
Yeah. So I would say, like, typically when you're investing, you have a lot of physical meetings. So that's something that definitely changed. I had my last like proper pitch meeting with a startup, or where a startup was pitching me actually in Silicon Valley outside San Francisco in February 2020. That was like the last proper meeting, and that meeting actually ended with a handshake, and we made a deal, and it was a Ukrainian legal startup called Legal Notes. But then the rest of the investments were done based on online meetings. And I think one thing that we have learned is that it's actually possible to have online meetings and get a good idea and good picture of the startup, and you can make an investment decision based on like a presentation and an online meeting, basically, and it's absolutely possible to do it, and so I think that has changed to a certain extent how startups are pitching, and it's changed how investment companies or funds make investments. So I wouldn't say, though, that it was a challenge. It looked like a challenge. It seemed like a challenge before it happened, but then actually turned out to be almost like a benefit.
What about your now startup portfolio? Do these companies now work offline or still online, or how?
Yeah, I think it's a mix actually. So obviously, I think a lot of companies, a lot of startups went into this like online remote working mode, and one thing that people realized was that you can actually run a startup online basically. At the same time, like a startup is like a kind of like a family or a group of friends. So you also need the social component, and I don't think that people will leave offices after this is over. I think it will be a bit more flexible than what it used to be before. So maybe you will be in the office 2 or 3 days per week, and then you will be working remotely from home 2 or 3 days per week. So I think it's going to be a mix. Like there is not a simple answer like online or offline. It's going to be a mix. And that's also something nice that we have learned, that you can be more flexible and still be productive. So that's the bottom line. Like you have to be productive, otherwise you're not going to be around for a long time.
Yeah, thank you. And what about you? How do you organize your working process? Maybe you have several, I can't say that it's like a habit, but do you have, I don't know, maybe one time a week, like meeting with these teams, or every team should like make a report to you to make a list what they have done for this week or for this month?
Yeah, that's actually a very good question. So basically, there are two kinds of investors. There's those that are actively involved in the companies they invest in, and there are those who have like a hands-off approach, who do not get operationally involved, and we are in this second category. So we invest money, and then basically we do not touch the startup. We are there as a resource for the startup, like not the other way around. Like we are kind of we are a resource for the startup. We are ready to help the startup, but the startup is not working for us, so to speak. The startup is an independent entity with, a founder or founders, CEO, CFO, CEO, whatever. And so we believe a lot in this hands-off approach. So it also means that we don't demand to have reports every month, for example. We like to see reports every once in a while. It can be once per month, it can be once per quarter, it can be once even per 6 months or something. Or, just to get an email from the startup saying like, just very briefly, how is it going? That's enough. But we don't require a lot of formal reporting from the startups. We do need to understand how the startup is doing. So we do need some kind of updates. But typically, if you invest at an early stage, which we do, or very early stage, then there will be some ongoing questions that you will help the startup with, and one of them will be fundraising. So let's say you invest $100,000 on a very early stage, and then they want to do the next round, so they want to raise like $250,000 or $500,000 or $1 million. Then you're going to talk to them about this round, and you're going to help them to increase the probability that the round goes well. So there is some involvement there, but the important thing to say is that we do not get operationally involved. We love to help startups, but we are not here to run startups. We are investors. So I hope that's somewhat helpful.
Thanks a lot. And we also, when we ask our startups about maybe some questions to you, what are they interested in? And the most popular question was, where and how do you search for a new startup? I think that maybe it's not a secret if you can share it with us, because lots of startups...
There's no secret there. I think the answer is you look everywhere, I think the most important thing, if you are an investor, the most important thing is that you have an idea in your head of what you are looking for, so that you will recognize it when you see it. So sometimes you get surprised positively and there's something that you didn't think about. But oftentimes there's like, let's say you're interested in, medical tech, like med tech, then if you see a med tech startup, you're going to be immediately interested because, and you kind of know what you're looking for. Let's say you're looking for, some diagnostics or something using AI or something like this. Then if you see one of these startups, then you're going to be very excited. And how do you get these things? Well, yeah, like previously you would go to conferences and events and you would see these pitch competitions and all that stuff, You don't really get that as much anymore, but we all miss it, so I would love to go back to that. But the thing is though, typically you would see a company, let's say you see a startup at a pitch competition, yeah? And then like a month later, somebody asks you if you heard about this startup. And then like a month later, you get the presentation from like some third person, or they maybe email you, or maybe you email the startup and ask for a presentation. And so typically you hear about startups from a few different sources, like not all the time, but that happens quite a lot, because even in a place like Kiev, which has, a big amount of startups, it's not that huge, like you still hear about these different startups and you also get a lot of introductions. So if we invest in a company, so we invested in this legal company again, a year ago, Ukrainian, legal tech company, and they introduced us to another company, an AI company, and we ended up investing in that AI company. Now this AI company introduced me to another AI company, which we might or might not invest in, but still, like you usually have this like chain of introductions. So basically, it's also about having a network, and to have a network, you need to be, kind of like a nice guy. You have to treat people well. You need to be able to help people when they ask for help, and also help people, help entrepreneurs, even if you might not invest in a company. Like I might say something like, yeah, like this is not our focus, so we are probably not going to invest, but I'm happy to help you with anything that I can do for you. So please let me know if there's anything you'd like to discuss or some introduction that you might need. So you can still do that, and then even if you don't invest in that startup, they will be happy to introduce you to other startups. So yeah, also just be a nice guy and try to be helpful. Then you're going to get these introductions, and and that might be the best way, maybe, because somebody is investing their own reputation to recommend the startup.
What have you faced with such situation, for example, when you're not quite interested in a startup, but the startup wants you to be his investor or some kind of this, and maybe you have faced with such situation when startup every month like send you an email, so now we have like these updates, and what do you think about it? Isn't it like quite okay for you as investor, or it may be some kind of irritating thing because you are not interested in such startup, but he force you to make this decision? What do you think about it?
Well, it's quite common that startups have like a list of potential investors, 5, 10, 20, 50, whatever, and they have like a send list. So every month or every couple of months, they send an email saying how it's going for them. Like they give some basic information, give an update of how it's going. And that's okay. It's even more than okay. It's actually very nice to see this, because it means the startup cares and they want to kind of keep you in the loop. And so I actually appreciate getting those updates. Of course, if it's a startup that I don't like, that really, it's just annoying, then I would send an email saying like, guys, I'm sorry, but I don't have time, or something like to read these updates. But actually, that has never happened. So it probably happens sometimes, but I think it's quite rare. So I'm actually happy if I see a startup which sends updates to me, even if I'm not an investor. I think it's a very nice thing, and they are like practicing also by doing that. So and I get these updates actually like from startups that I met like maybe 1.5 years ago, and now I get an email like saying like, Matthias, how's it going? I just wanted to update you on our progress. And I actually got one of those messages this morning from a guy that I spoke to 1.5 years ago, and he wrote like an update about. So he actually left the startup where he was 1.5 years ago, and now he's running his own new startup. And you see, like, he remembered me and he wrote to me, and yeah, I'm just happy to get that, you know. So yeah, I don't think it's a big problem.
And you talked about like when the COVID wasn't like a huge problem for us, when we was in real life connecting with people, when we were offline, and you know, we attend lots of events. But what do you think about online events, online pitch competition, online conferences? What do you think about it?
So yeah, with pitch competitions, I've been to online pitch competitions also, and I've been like judging also and that kind of stuff. It's not as fun as a real pitch competition, as an offline pitch competition. Like, you lose some of the energy. You can still do it, and it can still be useful. But I think what works very well online is like these individual pitches. Like when you speak to one startup and they pitch to you, and like you have an online meeting basically with, you know, several participants, but still, I think that works. I think online events is still something that needs to be cracked, so that you can like have an immersive, like interesting and kind of dynamic event going on. And it's actually quite funny because as we speak, there is a startup here in Kiev in Ukraine, which is called Party Space, and they're doing these events, like online events for, you know, Spotify and so on and so forth. And they are trying to disrupt that like online meeting market and to become like more interesting than just to have like an online conference. So I think there's still a lot of work to be done to make online events, you know, more interesting.
Yeah, thanks a lot. And, you know, I couldn't not to ask you, you know, in Russian language, we can use 2 times no, and it means yes. So I want to ask you this question. I have read about you on Wikipedia and your story about Yale.ru, when it first of all shown worse result, but then you bought the company and implemented some programs that managed to change the results. And I want you to ask maybe personal question, how do you manage to move on and never give up?
Yeah, I'll just say briefly about the Yale story. So yeah, I moved to Moscow in 2012, you can say, 2012. And it was a very dynamic, interesting time. Everybody thought that Russia, you know, was moving in a certain direction, and then it kind of changed, you know, but it was a very interesting time. Like, we started running Yale and we raised a lot of venture capital for it, and we grew the company from, you know, a few 100,000 users to 5 million users. But also at the same time, oil prices crashed and the ruble crashed and everything crashed in Russia. So it was also a tough time. And that was the point where we also made this investment in Ukraine at the same time. And it turned out in the end that Yale, we actually sold Yale back in 2017, but the valuation of Yale was not as high as it would have been if the Russian economy hadn't crashed. So you can get affected by these disruptions also, and then you have to like think, you know, like that it's a marathon, it's a long-term race, you know, and you just have to keep going. Yeah, I don't think there is a simple answer to that, like what keeps you going. You have to have some kind of motivation, probably. In my case, I just think it's like boring to have a normal job, so I'm ready to do a lot to not to go to, you know, have a normal job. So in my case, maybe that's the motivation. But there is, like, you also have to have a positive outlook, I think. Like, you have to be an optimist, and you have to be able to see opportunities even when it's tough. Yeah.
I ask this question because sometimes maybe it's also about early stage startups when they first try to do something and they fail sometimes, and they think that it's not mine. Okay, so I tried, but it didn't work, and so it's not my job. Yeah, it's not for me. And every time when I hear this story, I try to motivate people to say that, yeah, like these bad things can happen, but you should try. And what do you think about like failing? Is fail like an okay story and it's happened, or it's maybe some mistakes you should try to redo, or I mean that some fails maybe you should do, or what do you think about maybe some mistake you should try, you should do it?
What you should not do is to make the same mistake, twice or three times or something like this. Like making mistakes is normal. Everybody makes mistakes. I've made a huge amount of mistakes, and failing is fine. Failing is okay. You should try to learn from your failures. Like that's the main thing, I think. And if you think as an investor, one of the most important things is that, let's say that you fail in 50% of the cases and you succeed in 50% of the cases, just to simplify. Then your job is to, when you have a success, your job is to invest more money into the success than you invest in the failure, So if you invest more money in your success stories as an investor, then you're going to make more money in the end. And it's the same if you're an entrepreneur. Like you have to be able to recognize your good ideas and your bad ideas. Like you have to, if you're an entrepreneur, you're going to have a bunch of good ideas, you're going to have a bunch of bad ideas. You're going to have a bunch of like failed startups and hopefully some successful startups. Like your task as an entrepreneur is always to work with your best idea, basically. So if you start and you want to do something for restaurants, like you make a payment system for restaurants, for example, and then you work on that for like a year, and nothing happens. It turns out that nothing happens. But then one of your friends has a beauty salon, and they try your payment system in this beauty salon, and suddenly, a bunch of beauty salons are using your payment system. Like then you're like pivoting from restaurants to beauty salons. So it's important that you recognize as an entrepreneur that your original idea with restaurants was not like the best idea, but you can use this thing in a different context and then it will be a success. But you have to be able to recognize that where it works and where it doesn't work. So that's like a very important thing that you have to be able to do is to look like honestly at your startup and like without any kind of naive things going on. Like you have to have an adult like objective view on your startup, and you have to do it maybe not every day, but every week or every month or every year at least. Like you have to look at your startup and think like, are we really going in the right direction? Are we really doing the right thing? Could we do this same thing but in a different industry? Or could we stay in the same industry but do this thing a bit differently? So you should always be working on your best idea, and you should always be evaluating your startup and your idea. I hope that's a useful answer.
Yeah, thank you very much. And Mathias, we have the last question from our participants, and how can they contact you? Maybe you can share, I don't know, maybe your LinkedIn or email or or maybe HUB Ventures email. How can they write to you?
The easiest thing is if they just go to hubventures.io, there's a contact form there. So they can reach me directly there. Like I see all those emails, so I'm happy. I will respond personally to all these things. We could also post my LinkedIn if you like, and Facebook. Although I use mostly Messenger, not so much Facebook itself. But yeah, that's I'd be happy to take messages for sure.
Okay, thank you very much. Matthias, thank you for joining us today. It was quite interesting to discuss these topics with you because I know that you are really professional and your thoughts are really great. And thank you for your support, first of all, because, we have like bad times, but I think that COVID influenced all startups and they're all struggling with this situation. And thank you for sharing your experience. It was really interesting for our participants and quite cool to listen to you. Thank you very much.
Yeah, thank you, Rina, and thanks, Imaguru. I really like this opportunity, and I hope to be able to meet in real life very soon.
Yeah, we hope that in very nearest future we can meet, first of all, offline and in our hub. Yeah, when we will build it again. Guys, thank you very much for being with us today. Thank you for your comments. Thank you for your questions that you sent to us. And thank you for being with us today. I hope that the weather in this evening will be quite cool for you and you can have a walk and have your cool free time. Thank you for joining us today and see you next time in the nearest future. Bye-bye. Have a good time.